Hello, welcome to FountainFX on Friday the 10th of July 2015. End of a busy week of trading. As you can see, this is the Euro US dollar. This is on a 1 hour chart, and you can see that basic price has been pretty much range bound. It's started to trend upwards towards the end of the week. But obviously there's been a lot of negative news around the euro with the Greek situation, etc. But from this you can learn lots of lessons in terms of what to look around for in terms of market sentiment and what's actually happening out there. So it's easy when the market is trending very clearly. You just look for pullbacks and go with the flow. But when it's actually range bound, it's a bit choppy like this, it's very difficult, and often you can get caught on the wrong side of the marketplace, and therefore you can feel like trading's not for you, you're never going to get it, etc. So what I want to do with this session is just to highlight some things that may help improve your trading. And if you do want to take it further, then by all means you can join and take up one of our courses, and you can also join us on our live trading WhatsApp group. So if we look here at the start of the week, we had very much a gap down situation in the Euro US dollar, and this was from the Greek vote where they voted no to stay with paying off their debt. Very nice of them, but the reality from that is that the market sees a gap down because it doesn't always happen. It's not very often that you get a gap down. If we go back to the previous week and we look at that, I'll just take this off. Let's just go back to the previous week where it was actually a bigger gap down. Excuse me. So if we look at this gap down here, this was like 160 pips, this was 130 pips or whatever in terms of the gap down. So this situation here, what happened? Basically price found some support. The impression was that it was going to collapse. This spinning top formation here, which was the European Open, at one point this was a big red candle. Oops, my drawing's not very good. But here it showed with this long candlestick that you got some buying pressure coming in. Okay, so that gave us a potential buy order around about here. You could have waited for a break above this particular high to have taken a buy, but that's obviously giving you more and more risk, because this is your area of risk here, because price could go up, come back down, carry on down again. But in this instance, it was called, that was a confirmation candlestick to say, yeah, actually, we've just had a big bullish engulfing candlestick. We've had some consolidation. We're now getting some further buying pressure coming in from down here at the tip of this candlestick. So buyers are coming in. It's giving us some indication that price wants to go up. We've also got a big gap above it. So if it does break above here, we've got a great target. And that's the kind of things that you need to be considering. In this instance, when it did gap up, you got the European session sort of finished somewhere around about here. This was a great push up. Basically, in terms of my trading, we took out our profit there because it was like, well, the Americans are coming in, they may or may not continue to push up, and they did. It took them several hours, but eventually they did push the pressure up, and they took it way above the origin of the gap down. So the euro very much recovered all of its losses because of the Greek issues, etc., and moved a 250 point move on the Monday morning after a 160 point gap down. So what you need to recognize is that when there's a big move, sometimes look for a reversal in that big move. So that was an example there. If we go to this week then, if we scroll back, sorry, I'll change my cursor. Scroll back this way. So in terms of the week that we've seen, we started with a gap down, as we saw there, and we saw a gap recovery. So it didn't go like the previous week and carry on up, but it almost reached a gap close. Now, typically the statistics are is that 95% of the time it will get to 50% of the gap close, 80% of the time it will close the gap fully. So it almost reached the full gap close, but that's quite simple. You can just manage your trade according to that and see that, oh, actually it's not really getting there. You could take a target off just below there. I mean, a simple target, you've got a line running here. This is looking at previous levels of support, etc. And it seems to have used this also as an area of resistance. And if we go back there, area of resistance again, and here, area of support. So you can look for certain levels that become consistent, and that might help you in terms of your trading as well. We then have middle of the week, we started to see, well, from there price sold off, and it did break below this previous low. This was the gap down low from the previous week. If we go back, I'll confirm it with you. There you go, there's the line there. So it did break below that, but didn't continue. This is sometimes where banks and institutions will play. They're stop hunting, because obviously seeing price break below the previous low, there'll be a certain strategy which says, well, when it pulls back, use it as resistance and sell. So people would be looking for a continuation down here. So it's a push down, they'd be expecting to pick up and pull down. So therefore their stops would be above this particular area. So it's called let's reverse it, stop take, and let price continue on up. So there would have been several people that have been, quite a few people that have been caught out there in terms of their sell orders, but price has continued to push up and continue on up along this trend line. And one thing I want to show you here, the reason I've left the trend line is that eventually that trend line can become resistance, as in up here. But why is that resistance? It's not just the trend line, it's not that specific trend line. Why has that become resistance? Is because if we go back to the left, we can actually see previous areas where price sold off from. This is a big sell area here, so big sell candlestick. What I would recommend is you do look at candlestick patterns. They are extremely good at refining your trades. It's a way in which you can see where the buying and the selling is coming in and where the strength and weakness is coming in. Combine that with trend and support and resistance, and that will certainly improve on your trading. So if we go back to the right, we can now see that all that line that I just put on was exactly there. That was the point where we looked to take off our profit when we were trading this morning, trading on Friday morning. So we took in a buy down here because we saw price break up. It was running in a trend, so therefore we're going with the trend. We saw a pullback down into this area, what was previously resistance. And it wasn't just a case that we took it because, oh, it's previous resistance. It gave a very clear candlestick reversal pattern at that point. So we didn't get right in on that level. We bought in here. So this is where we bought into the market at this point once we got confirmation at a smaller time frame. And our stop was down below here. And that was basically it. We then took the trade and we took out our profit just around about here, because obviously it did go up to it and then it started pulling back. Confirmation that yes, that was definitely the area of resistance. So a good 100-point trade. That was a nice 100 points. It did go 110 points totally in our favor, but you're not necessarily going to be taking everything out of the market. So that's really something to be considered. You do have to look at levels, etc., and see how they perform. And then this is also the US Open, so we saw a reversal in the marketplace with the US coming in. You don't automatically go, well, I'm going to sell them because the US have opened. Some people do, but that's a bit gambling. So you're looking at a range when the Americans came into it, and you can see this selling off candlestick gave a nice sell-off pattern. But in this instance, we're going against the trend, and as you can see, it did get down to these moving averages where it started to do a reversal. Okay, so there's various things you can look at. We do cover this on our courses. We do cover it through our WhatsApp group, but this is something you can use to try and refine and improve on your trading styles and strategies so that you can actually raise your profitability. That's really it for this week from FountainFX. I hope you had a good week. Looking forward to a great week ahead. We have a trading session on Tuesday evening, 8 o'clock. If you want to join us there, just send an email through to support@fountainfx.co.za to join in, and we will see you on Tuesday, hopefully. All the best. Bye-bye.